Good afternoon and welcome back to our end of day review for today. And today is Tuesday, it's October 14, 2023. And today we have the CPI data release. And you see it's the big jump right here, right? It's a $6 jump right there. From the time the data release, you see up here when it opened, it's $6.39 right there. Yeah, and it's very $6.42 right there. That's a huge jump. I mean, I don't think I see this kind of jump, but it's amazing. That's a strong move. And if we look at the pre-market, right, let's just close. If we look at the pre-market volume, you see 4 million. In the pre-market, it's 4 million shares were traded, and it jumped $5.80. Because yesterday it's closed at 440.33. 440.20. That's what I mean. 440.20, right? But today it opened at 446.33. And it's closed at 448.71. So the pre-market is really jump right there. For the whole day, it jumped $8, almost 2%. I think it's a huge jump. We ever see it, you know. It's a massive jump. Okay, if we look at the hour, I mean daily or candle, we see it's jump huge. Man, look at the gap, huge jump rate. Well, yesterday we looked at this, we think that may be a short setup coming, right? If the CPI is not positive today, I think it goes short right there, because you have an uptrend, right? And then you have a market structure shift, right? It's close below, it break this market structure, and then you have confirmation, and then you can short when it make a retracement. But the data from today's CPI is really blow out of water. So that means this short setup is no longer working. So that's the idea right there. Got some water right there. Okay, so let's look at the play, the trade that we going, right? Apparently when we see this setup, it keep going up, it's very hard for it to get in, right? The way the markets move, it's very hard to get in, because we don't know, you know, if the price too high. That's our first instant right there. So we try to short them, and when we try to short them, we have to be extremely careful, because it's a huge move. You have to short them very precisely in terms of the time and in terms of the target. Otherwise, otherwise we will get stopped out. Let's look at two trades that we took today, two practice trades. They both, short setup, right? So we enter about 10:07, right? That's the first thing we try. So we saw right here, we put level right there is 448.20, right? We think that gonna be a 4 breakout, right? Let's see if we succeed with the trade or not. And we anticipate that it's gonna go to 1-to-9 ratio, and that's the huge right there. Basically we want it to go down here, retest this one, but it turned out our target never hit, and our sub lot got hit at 10:24, which is 17 minutes after we end the trade, and we lose 1 hour 38 cents. You see it hit right there. So the lesson learned for us is the lesson learned for us in this is our entry too early, right? Short entry too early, and too early, right? So I'm too excited because you know why? Because of the massive move up from the CPI. A massive like that, you not expect them to go down all the way to $3. You're not gonna give back that much. So a 360 move, down move is not realistic in this case. That's understand for us. But anyway, the second trade we do, we succeed, right? And how do we do the second trade? Right here, we go in at what time? 11:19. Okay, and we just put, our target is around this area, right? The favorite gap should put around there. But later on, let's see how the trade, progressing, right? So we put our target is 1 to 3, or actually 1 to 4, right? $40, right? And every time 1 to 7. However, we find out that the better entry at 49, which is about 30 minutes later. Right, let's look at that. So basically there, the better entry right here. The reason why better entry because it's line up with other setup, with 2 more setup, which is the 3 push setup right there, right? 1, 2, 3. 3 major push right there. That means the momentum of its exhaust is gonna be a reverse, right? It's gonna be a retracement. You wanna take all the short side liquidity before it going up again. So that's an idea right there. That's the one setup layup, and another setup layup is auto block, failure gap, free test short setup right here. You see this auto block, and you see the failure gap displacement. You do have it here, but this one is a fail, right? The retest succeeds, it break the level. So that gives you a signal right there. And we did, do the first trade on this, and we failed. So it's a good idea for us to wait, and we did wait until at late level. But the better entry is 30 minutes later, which is at 11:49. Perfect entry right here. We put the sell stop right here. When it go up here, put sell stop right here. And when it went down, it never retest that area, right? And we wait for, yep, we reach our target. And that's out of block. And so we have three setup layup, right? The three push, the ICT concept, auto block, follow up, retest, short setup, and then of course our key, our main setup, which is turtle soup, which is a 4 break at the level 449.38 right here, right? That's the confluence right there. And the exit time for us is right here when it hits that level. Remember, the target will revise a little bit, right? At first we put our target a little bit deep in here, we follow up, but then we revise to 447.72, which is a key level right here. It is one of the total sub level before that, right there. So if we are staying the trade, not moving our stop loss, so we risk only 40 cents and we gain $1.62, which is 1 to 4 risk, 1 to 4 risk reward ratio right there, which is make our trade, right? We not trade until we have a 1 to 4, at least 1 to 3 risk reward ratio right there. And we make we reach our target at 1408, right? 1408 right there. So we wait for how long? So if we go in right here, right, better entry right here, so we wait for 11 minutes plus 9 minutes. So the trade duration is only so 11:49 to 14:08, so it's 19 minutes. Not bad at all. It's beautiful trade. And we need to revise the target right there. The target should be at 447.72, 124 risk to reward ratio right there, and we have a 4R profit. The previous trade we lose 30 cents, which is 1R. So the lesson we learned from this trade is that when going short again a strong trend intraday, intraday short trend, which is today, right? Today is intraday strong trend. We must be patiently waiting, wait for the signal to lay up. In this case, that we have to entry after 11:30, which is in this case, which is the Q zone. New York Q zone is end at 11. So wait for 11:30. If we're going a little bit early right here at 11:19, it should be good neither. But perfect is 49. And wait for the three setup, because we want to make sure that the momentum, right, exhausts, right, or momentum climax. You want to see the climax so you can retrace. That's the hard idea right there. And then you see a auto block fabric graph, short setup plus with the total sub level right there, which is we have in this trade right there. So basically right there, you see right there. We were going right there, and then when it hit our target profile right here, 87. No, we're here. 447.72. Yep, the high of this is 447. 50. No, I mean. Hold on. Is this one? Yeah, 72 right here. 447.72 right there. This is one of the key level, right? That's the target for our short setup right there. That's key level. $72. Yeah, it hit right here. 72 at 1408. Right? Is that right? Yeah, 1408. It hit right there. And you see this level is very precise. As soon as it hit level, it rebound right away. And it gives it a beautiful setup for the next trade. If you look at the 5 minutes, right, you have a beautiful setup right here. Basically, you put in the total stop level right here. You put a buy stop right there at 447.87 above the key level. But let me delete this one, a little bit hard to see, but you see right there. And what else do we see right here? We see a double top. I'm sorry. We see a double bottom right there. You have a huge leg up, and then you have a double bottom that gives you a signal to go along all the way. Very reliable right there. And also you remember this is the DR model, right? It gives you the signal to go along, and when you see that, then you know that you have a very reliable setup. And that's how we have the third trade along setup right there, which is total sub long setup plus with double bottom uptrend. The reason why we put uptrend right here, because when we want to play the double bottom, it's better for it to go with the uptrend, right? You don't want to go double bottom on the downtrend because it's less reliable, because we go against the trend, right? Whenever you go up, you go with the trend, it's more reliable than again the trend. So basically this is a trend follower. Trend follower trade, okay? And also another confluence right here we need to add right there is the DR model, right? The up move confirm. You have up move confirm. So give a very solid, confirmation right there. So basically we have 3 confluence right there. First we have a total sub long, and then you will have a bottom, double bottom, uptrend, and then you have the DR model with the, the up move signal confirm. That's wonderful right there. You see right there. Okay, let's open right here. Let's look at the screenshot right here, right? So we have the double bottom right there. We just simply put the buy stop at 447.87. When it moved out and when it moved up, execute, you never look back. And we put our stop loss 5 cents below the low of this candle at 1405, right? Which is 47.70 right there. So basically we reached what, 22 cents, because 447.87 we buy at that, and we put the stop loss at 447.70, 27 cents. No, we use this number, right? At the entry we minus the stop loss, we put, so basically 87 minus 25, I'm sorry, 87 minus 65, it will be 22 cents. That's where we get the risk. Our risk, we reach 22 cents. And the target we put is at the buy sell liquidity at this level, which is 449.73 right here. And that level got hit at this candle, which is at I think we mix type right here. It had to be 1505, not 13, right? At that level, it hit at 1505, not 13. So that's a mistake we got right there. So I'm glad that we see that. So exit time is 1505, okay? Not 1305. Is that right? Yes. The screenshot we have, I think we missed second right here. We may calculate, so it should be 1505. Yep. And how much we gain? It's 1 to 6 ratio right there. Our requirement is 1 to 3, right? And we get $1. So profit is $1.52, which is what, 6R. We need to spread everything in terms of R, so it's easy. So we lost 1R, we win how many R? 10R. So total we are winning 9R for today. What a wonderful day for us right there. We have both long and short. Beautiful trade. What else we expect, right? Just be patient, wait for the setup signal to light up, and we check the trade. We should stay calm and composed. We need to stay out. We need to stray from the state of mind that, there's no fear in us. We completely align with the market, right? With the universe. Someone would say that, right? We stay of mind that very peace, in harmony. Stay in the present. No resistance, right? Whatever market gives us, we take it. We not resist anything. No fear, no greed. We have to remove. We have to look inside of us. Remove any so-called survival or negative emotion right there, which is in trading is greed and fear is rampant, right? And we have to get out of that state of mind. In order to trade perfect, we have to stray from the state of mind that, you know, the market is abundant opportunities. We don't chase it. The market will bring into our life. We hand it to us and we just take it. We're not chasing anything. We're not in the mindset of, you know, scarcity or mindset of poverty, right? We come from the mindset of abundance. You know, the universe is abundant, and there are enough money for everyone, so we don't have to chase. If we stray from that perspective, then everything, you know, come to us very easily and effortlessly, right? And we accept the loss easily, right? There's no regrets, you know, no shame or no no shame, no regret, you know, nothing. I mean, I want to read something from the research that we read. For the super trader, successful trader, they take total responsibility for the results that they get. They don't just blame someone else or something else. They don't justify their results. They don't feel guilt or ashamed about their results. That's what we tell you earlier. No shame, no guilt, no regret. The mistake or the loss we take is part of the game. It's nothing. Don't personalize it. Don't attach any negative feeling to that. They simply assume that they are create them, which is the result, right? Whatever result we have, we create it. When we take that responsibility, then we can create a better result. But if we blame our result on someone else or something else, then we're not going to create a better result. Then I can create a better result by eliminate mistake. That's the beauty right there. We need to eliminate our mistake. The mistake that we don't follow our system. We saw the setup and we failed to take a setup, execute setup. Right. For simplicity, right now we just trade, practice, and when we trade real on Thursday and Friday, we only take one share, one side, the side take one share for, practice purpose or for development system purpose. But we follow our rule right there. So basically for today, you see it's a huge move up, and let's see how tomorrow we're gonna continue this or we're gonna retracement right there. But you see huge move today. It opened at 446, right? It opened at 446.33 and it's closed at 448.40. No, 71. 448.71. Basically it opened right here, you see that? It opened at 446.33 and it's closed at 448.71. So the open and close gap is $2.41. $2.41. Basically from 446.37 to 448.71. Let's look at the. I want to look at the weekly candle right here. You see, this week the range high and low only $4, but for this week, you look at that, it's already $11.13. 64 cents right there. Wow, that's a huge number. What is the number again? Oh, so we have two, right? High and low, open and close. So open close 11.13. Is that right? Or no? Oh no. This is November 13. So that's the day. This is the week number 46, and this is the date November 13. And here's the difference between high and low. So the difference between high and low for this week so far is 11.64, which is almost 3 times of the average for the last 20 years right there. So it's huge. Something happened very huge right there. You know, the huge momentum to the upside. But if you look at the weekly, right, you can see that this auto block is still valid. But as short setup, you see, auto block, boom, displacement failure gap, and it's retest one, all right, it tests the second time, it break the failure gap, but it's still under this auto block. So very interesting to see tomorrow and the rest of the week if it break down this level, this key level on July 1st right there. So 451.36 is the level we want to watch for the rest of this week. So all right, we want to close, wrap up today and update review for now. Thank you so much for your time and have a wonderful evening. Talk to you later. Bye for now.